What's up, traders? It's Mark Sebastian, your only option, and this is the Trader's Edge weekend look ahead. Today, we're going to look at where I'm expecting the indexes to go. We're going to talk about the earnings that I'm paying very close attention to, and I'll give you a look ahead at the VIX. Pretty excited about this. So let's dig in, people. Friday was a weird one. We ended up closing pretty darn flat. The market as a whole was super flat. What was interesting is we were down and implied volatility really came in. And VIX futures also came in. It was a really interesting day. UVIX sold off and VXX, just really interesting. We're at a spot where actually, if we pull back a little bit, I could see implied volatility coming in a little bit. But let's look at SPX. 3 days in a row, we have failed 4,900. We failed on the 24th, the 25th, and the 26th. At some point, I think we're going to break it before we crack. Now we're in a spot where I do think we could crack. It's going to be, I believe, earnings dependent and Fed dependent, because we've got the Federal Reserve coming. The Federal Reserve meets on the 31st. That's when their announcement is going to come out. That is going to really dictate, I think, the entire month of February. The whole market is expecting a rate cut in March. I don't think it's going to happen, and I think that could potentially send markets significantly lower. All right, so SPX, though, before then, look for 4,900 to break. I think that it might even break on Monday. Now, let's look at the Qs. Kind of a similar story. They had a really nice day on last Friday, but really on the week, barely up. Pretty ugly day on Friday, down pretty big. Why? Apple sold off pretty significantly. Amazon was pretty flattish. Google down a touch, but we did see a nice win out of a little bit of a pullback from Microsoft, which is still over $3 trillion. And we saw Meta pull back a little bit as well. Kind of an interesting day as a whole, but really kind of mixed bag. IWM was the kind of the strong index of the group, but everything kind of down. Diamonds as well. So with SPX, I'm looking for 4,900. With the Qs, I think if SPX makes 4,900, we could see it make 430. All right, but that would be before the Fed. Post Fed, I think we're going lower. Now, let's talk earnings, and then I'll circle back to the Fed one more time. Earnings, obviously, it's a huge week. We have earnings in Apple. They're expecting, I think, too small of a move. I think the earnings are going to disappoint, and you're going to see Apple make a serious run back below the 50-day. We have earnings in Google. That one may be a little more interesting. I'm really interested to see which direction this thing goes. Google has been on a bit of a tear, really taking advantage of this AI move. Obviously, we've got Amazon as well. And finally, Meta. So we've got 5 of the Mag 7s, because Microsoft as well are reporting this week. That's a huge portion of the S&P 500 from a cap perspective. Now, the last one I want you to keep a tight eye on is AMD. It has completely blown out of the water. Here's what I think is going to happen with AMD. They're going to have incredible earnings, and it's going to sell off. They have priced in such good earnings into AMD at this point that unless they come out with beyond lights out earnings, I mean, it has to just be, the end of the natural, the baseball hitting the lights in the stadium, and the lights the lights exploding and falling onto the field. They're going to be that good for AMD to hold these levels. I think you're going to see AMD drop. So those are the 5 most important earnings for next week. Now, back to the Fed and back to SPX. Options are too cheap heading into the Federal Reserve. Next Thursday, that's February 1st, the day after the Fed, we close 48.90. The at the money straddle is only about 55 bucks. That is incredibly inexpensive. We just need one day of movement, and we could get that out of the Mag 7 earnings that we're getting, or more interestingly, the Federal Reserve. So I think options in the indexes are incredibly cheap heading into the Federal Reserve. I am a buyer. I own some already. I may buy more. Now, finally, let's hit on VIX. VIX is 1326. It will be higher by Wednesday. I think it could be 14 and a half. And then if we get some selling, don't be surprised if VIX doesn't get a huge reaction, but we still sell off. Now, that said, term structure in VIX is so tight that if we do get a real sell-off, VIX could explode, especially the VIX futures. So tread extremely lightly trading the volatility index this week. I think a combo of long SPY, long VIX makes a lot of sense right here. That would be the trade I would be putting on. I would buy like one SPY. SPY is trading 47. I might buy like a 489 call for Friday. And then against it, I would buy 4 VIX calls. All right. So with VIX calls, I'd buy regular Feb 14, happy Valentine's Day. The 15 calls are less than 75 cents. The 14 calls are less than $1. So I might pick up like 3 or 4 of the 14 calls for $1. And then in SPY for next Friday, the 489 calls are about $2.70. So that's pretty cheap. The 487.5s are only $3.40. So I'd probably buy one of the 487.5 calls. And then against that, I would buy 3 VIX calls. That is a really good actionable trade that I would enter Monday in. That would be my trade. All right, folks, just a reminder, my conference, the Option Pit Conference for active traders is going to be in Chicago, July 22nd through the 24th at the SIBO. We can't wait to see you there. We want you to join us. Shoot us an email, support@optionpit.com, or call us 888-872-3301 to join. You can also click the link in this email. All right, folks, I hope you have a wonderful rest of your weekend. I am Mark Sebastian, your only option. Have a good one.